Today, we're looking at an analysis of Strive Inc., or ASST, and its big breakout above $1 as it pivots to a Bitcoin treasury vehicle.
And this piece has fantastic analytical bones, a really deep command of the catalyst. Let's just jump straight in and talk about maximizing its impact.
Okay, so first up, the material correctly identifies that ASST's pivot is highly reminiscent of MicroStrategy.
It does. And that's the holy grail of comparisons here, but you don't really capitalize on it. The parallel to MSTR is so compelling, but the analysis, it just misses the chance to use MSTR's history as a quantitative benchmark.
But wait, wouldn't that be a bit like apples and oranges? I mean, given MSTR's massive legacy business compared to Strive.
Well, that's exactly why you focus on the core crypto ratio, right? You strip that other stuff away.
Oh, okay.
The fix is to turn that history into a real analytical tool. So you could introduce a specific metric, like the ratio of ASST's market cap to its 7,525 BTC holdings.
And then compare that to MSTR?
Exactly. Compare that ASST ratio against MSTR at a similar early stage of its treasury building. That immediately tells the reader if ASST is a value play or if the market has already priced it as a leveraged bet.
Got it. Okay, next point. The analysis makes a very strong case for the breakout fuel. It clearly highlights the Bitcoin holding and that new $160 million IPO.
The logic is totally solid, but the sequencing, it feels a little off.
How so?
Well, the analysis jumps straight from all this early innings bullish momentum to the severe risk that a small BTC drop could cause a huge plunge in ASST.
Right. It feels abrupt.
It really does. And that abruptness, it kind of softens the impact of that risk warning.
I can see that. That structural separation would make the risk feel much more, well, acute.
So the suggestion is to refine the structure. After you detail all the breakout fuel, dedicate a totally distinct section. You could even title it something like the 80K line in the sand.
I like that.
It gives that dependency on the broader Bitcoin bull run its own space. It gives it full weight. And that way, the 10 to 15% plunge warning, it lands with maximum tension. It defines the stakes.
That's a great point. Okay, last one. It's a phenomenal technical observation that ASST showed impressive relative strength, closing green while Bitcoin was dropping.
A fantastic observation, but the analysis, it just stops short. It doesn't connect that immediate strength to the fundamental reason investors should actually care.
Which is the upcoming capital deployment.
The $160 million, yeah. So you have to bridge that technical signal to the future strategy.
Okay, I see.
We need to analyze what this relative strength actually suggests about investor confidence. Probe the idea that this isn't just a reaction to the stock breaking $1.
Is something more?
Maybe. It could be that smart money is actively front-running the expected value from that full $160 million raise. That implies a really specific and high expectation for the next leg up.
Okay, this was all highly actionable. So just to recap, we've identified 3 big opportunities for improvement in your analysis on Strive Inc.
First, quantify that powerful MSTR comparison. Use a real metric like the market cap to BTC holdings ratio. Second, you have to structurally separate your bull case from your bear case. Give that risk its own section.
That 80K line in the sand.
Exactly. And finally, deepen the analysis of that relative strength by tying it directly to the fundamental catalyst, to that $60 million in fresh capital about to be deployed.
Implement those changes to really increase your analytical depth. And please, submit your revised work back to the critique.